Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about retail and retail real estate. Well, now let's look at REITs, real estate investment trusts, in particular focus in on some retail REITs and see what performance has been and what we might expect moving forward. We have an expert with us on the phone. It's Stephen Marks. He's Managing Director with Fitch Ratings. Stephen, thanks for joining us.
Michael, thank you very much for having me.
We appreciate it. And so how did retail REITs perform in 2015?
Not that great. They were down a couple percent on a total return basis, which does include the impact of dividends. So one of the worst years that retail REITs have had in probably the last 5.
That's interesting. So how did retail REITs perform compared to the other REITs? Is everyone down a little bit?
Everyone's down a little bit. There were a couple winners this year in some other sectors. On average, again, on a total return basis, the sector was actually down about 1.5%, and so retail REITs did a touch worse than that, and a touch worse than the overall S&P 500 in 2015.
Okay, and but they did pay dividends, didn't they?
They do, which is why looking at total returns is always an important metric that we look at, and certainly over longer term periods, 5 years, 10 years, up to 25 years, REITs have consistently outperformed the broader markets.
Yeah, and I think some of our listeners may find that interesting because, REITs have the underlying real estate and the fundamentals for real estate are good, right? There's been increasing rents and increasing occupancy, so you're expecting NOI growth that we've seen in these properties. So, why are REITs not performing well?
Well, it's really a couple reasons. One is that the fear of interest rates, what that might do to common stocks, in particular entities or vehicles that are yield plays. And just back on the total return concept, about 2/3 of REITs' total return over any long-standing period of time has been about 2/3. So dividends are a meaningful part of the story for REITs, especially on the equity side. And so whenever there's a fear or the reality of increasing interest rates, yield-driven vehicles, at least in the short term, do tend to underperform.
Well, let's talk about that for a minute, Stephen. Give me some advice if I'm a retail investor. Is the outlook for commercial real estate property performance, in your opinion, look strong?
In general, we do think that property performance will be good, driven by a handful of items, namely supply and demand for most property types, in particular retail, are in balance. Some of the challenges that the retailers face, or that the retail REITs face in particular, are items such as store closures or retailer bankruptcies.
Right, and we are seeing some of that. So the stock market's had its struggles so far this year. So does that mean there's a value play at this point in REITs and in retail REITs?
Well, as we think about it as credit folks, we're probably one step removed from the equity, but in our view, the retail REITs, we think will perform generally pretty well. Our outlook on retail REITs is above average, although that view that we have is somewhat bifurcated by whether or not we're talking about mall REITs or strip center REITs.
Well, let's talk about that. Which REITs do have the strongest outlook?
Within the retail space, our view is that the strips or the grocery anchored REITs will perform best within the retail sector. Really because, while there is some grocer fallout from the intense competition as traditional grocers get squeezed out by the specialty and warehouse discount grocers, they have been able to backfill some of that vacancy to the extent that it does exist, and in particular filling some of the inline space, the small shop tenants, not so much the grocers or the bigger tenants, but the small shop occupancy and rent gains have been the biggest bright star within the strip center. Malls is a little bit of a different story. Malls are facing some challenges, other challenges because of the bankruptcy risk of some tenants. We had a slow holiday sales period this past couple months, so we view that overall cash flow growth is going to be slower for malls. We do like the higher productivity malls better than the B's and C's because the challenges on the tenant side have been incrementally impacting the B's and C's worse than the A's. That the higher quality centers have better occupancies, higher base rents, better leasing spreads, and overall better cash flow growth.
Right, and as our listeners know, you can invest in REITs a lot on the stock market, so it's a very liquid investment, and a lot of these REITs very much specialize in what they do. And one of the specialties that we see out there is the single-tenant net lease market. What is your outlook for those REITs?
The net lease space is pretty strong. A lot of those tenants are in the retail space, whether it be quick-serve restaurants or auto centers or things like that, which throughout this cycle, in our view, is over the next few years are pretty resilient businesses, and they're very easily meeting their rent obligations with their property level cash flow, which is ultimately the best determinant of how well those properties are going to perform.
Right, and then you mentioned investors' outlook on how rising interest rates will impact, the stock market in general, and then in REITs and in real estate. So, what's your view of how rising interest rates may impact REITs and retail?
We don't think it's going to impact it much at all, because to the extent that there is a higher cost of capital, higher cost of debt, because companies' debt is more expensive because of a rising interest rate environment, that will be more than made up on the top line, because if interest rates are increasing because there's stronger GDP, stronger economy, job growth, decrease in unemployment, all those things are good for commercial real estate demand, and in particular retail demand. And so, we view that the top line will be quite strong because of a growing economy, even if there is rising interest rates that do come along with that.
Okay, and there's been some talk of bubble pricing on some of these institutional quality assets, especially in the major markets. And there's some change in the FIRPTA, the Tax Act involving foreign investors investing in U.S. real estate. And could that increase buyer demand and impact the value of these REITs?
We definitely think so. We thought that when these tax rules came into effect just last month, that they do remove some of the hurdles faced by some foreign investors when it comes to REIT acquisitions and in general U.S. commercial real estate. And so in our view is based on the premise that long-term foreign investors are increasingly looking to real estate for returns, because cash yields are higher than government debt, particularly in the G20 nations. And so certainly taking a REIT private or buying U.S. commercial real estate can act as a good hedge and as a good source of income for some of those buyers.
So you do think that foreign investment will increase? I guess it did increase in December from what we've heard already. You think that's going to continue?
We do. In some ways, it's a little tricky when you look at some of the numbers, because some of the quote-unquote foreign investment might be wealthy people in some oil-rich states buying New York City condos here. But once you strip out some of that data, we think that overall that these changes in the FIRPTA rules are going to be a real positive for M&A or just in general acquisition activity here, because it removes a meaningful impediment that had been in place for a pretty long time.
Okay. And if you were interested in investing in stocks, is it today better where we are in the market here in January, since the market's dropped, than it was, say, in December?
Well, one could argue that good time to buy when stocks go down. And so while we don't have a specific view on common equity or equity valuations, because we're on the credit side, certainly when there's fear, oftentimes that can be a good time to jump in.
Well, Stephen, thanks for joining us. As always, great information. For more information, visit FitchRatings.com. I'm Michael Bull. This is the Commercial Real Estate Show. We have more. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.